The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. And it is a nice, hot, into summer day out here on August 21st. Not 3rd, 21st, ST. Well, I'll get that fixed. In fact, let's do that right now. Oh, I didn't want to do that. There we go. Now that I can do things on the fly, I'll fix them on the fly. August 21st, of course, we've got an interesting market out here. Of course, we've been talking about the predictably light volume coming into the last 2 weeks of August, especially this week, as we'll probably have a few more traders back next week. The retail trade tends to be on vacation and try to take into a 3-day weekend. So you also get a little bit of that for people that aren't racing off to get their kids back into school next week. You get a few more people ducking out and trying to extend their holidays one more day by getting a 3-day weekend into it. So really the big volume will probably kind of come back after that first week of September. Which, of course, is only going to be 4 days, Tuesday through Thursday. But even today, we've been looking at about 1.6 billion shares. When we start the show here for the last few days, we got 1.57. So just a tad less. I suspect we're probably going to have a very light volume as we go into tomorrow. We have set a new high on the, at least intraday high on the S&P 500, 1992.58 is the last tick, up $6 basically. So we've got light volume up at these highs once again, and of course, probably the worst thing are these light volumes. It makes it very difficult for the market to go down normally, because the idea is that you can just shortly and quietly squeeze shorts by just putting up your stock another quarter or 50 cents every day, and they just kind of stumble up until everybody gives up and decides that they don't want to be short going into the long weekend, and you get a few more days of that. And it's not let me put it this way: when they did the research into 9/11, the reason that they picked those dates, they thought the stock market would be its most vulnerable. And, of course, September's tend to be weak months to begin with. A lot of people sell what they don't like before the end of the year. And, of course, you start seeing people come back in normally late September, in October for the Christmas, quote, quote, rally. At least the ride into Black Friday to see what retail is going to be like. But not looking for volume again until probably that, what is that going to be? The first is on a Monday, so that puts us back on the 8th of September for the first full week of trading after all the vacation cycles and everything's out. Of course, that puts expiration on the 19th. And normally if you're going to have a weak September, it is after that first expiration day. Of course, we watched and talked about last week the options rollover. Or was it this week? Yeah, the Monday and Tuesday options rollover. Now that's pretty much done, and we've got an early expiration with the 19th next month, and after that, it's the 17th. So. They're not going to be long. We'll cycle back into longer expiration cycles, I think, in October and November. But it is going to be a quiet time at Lake Wobegon, and there are places to make cash. But more likely, it's going to be probably around commodities. You're going to see some small moves. Of course, we're getting in the very last few innings of S&P 500 earnings, and we'll talk about that in a little bit. But it is quiet, even being up 6 points on the S&P cash. The volume is not big, even making these new highs. So you kind of have to keep your eye on it. A lot of these stocks are pushing and trying to squeeze the shorts. So you can see intraday, a lot of these stocks have made, an extra 50-cent run or something intraday and just ran any shorts that had stops in it on the upside, on the downside too, because there are a lot of stocks out here that are also being a little weak. But I digress. Anyway, in 1999, on this day, a record price in dollars unadjusted for inflation is paid for a membership seat on the New York Stock Exchange at $2.65 million. Quite a rise from the record low price of a seat in 1942 of $17,000. 5 years later, seats will be trading for around $1 million. And, of course, there's probably every seat you want in the world now. CNBC's got a set on the New York Stock Exchange. Of course, as we've talked about on the show for the last few years, almost all the trading happens out in New Jersey in a secret facility that's right next to a high school. We showed pictures of it from Google satellite. It's probably one of the most secure facilities and has rumor has it has a bomb-proof roof so someone can't fly a plane into it. But it is a giant facility where everybody just hooks up their machines. But almost all the trading goes on out there. I want to say it's Walmart, New Jersey. But I can't remember what the real name of that is right now. But it is a interesting day as we start this. And, there were no dukes involved in this 1999 buying of a seat. I always liked that they had to sell their seat, liquidate everything they had. Interesting. Anyway, a little Trading Places reference there for those that didn't get it. But, of course, just in the highs, like 1999, it hit it. Of course, the electrification or the computerification, what would it be called? The automation of stock trading continues on these days. And, of course, the big money is not hanging up that phone when you get the big order anymore. It is, of course, being a high-frequency trading system that has access faster than anybody else. But that even now has started to fade around Wall Street. Yesterday I had a question about what I was looking at when I said that HP probably didn't have more than $1 up or down. I was looking at my own charts, but any of these charts that you look at and see the expiration, what they call the expiration smile, that is the curvature, how much money would be won and lost. Sometimes it also includes the decay and the option premium, but didn't do it. I mean, basically no one was looking for a big move in HPQ yesterday. It was trading in the a little over $35 going into earnings. Well, it traded off a little, went back up a bit. They had the earnings call last night. It was trading flat about 9. Just before the open, I think a little bit after 9, Meg Whitman, the CEO for HP, came on CNBC and started talking it up. But probably the one thing she did that made it move a little bit later was, and into the day, was a little snippet where they said that they had been talking about making a rather large acquisition. And they are not going to make that acquisition anymore. As soon as she let it known that that money was back for repurchases of shares, a lot of the shorts started to run. And did I have a quote on that? Yeah. Now it's up $1.98. So got to run a few of those shorts out with just the whisper that they had an extra $10 billion laying around that they could buy or rebuy shares with. And, of course, somebody started a short squeeze on it. Who knows if it was Meg Whitman's comment or something else. You can never have alternate realities. But the the stock was trading pretty flat, maybe 17 cents higher before she started speaking. So I have a feeling that's exactly what it was, that everybody that thought maybe they'd have a disastrous quarter was probably just going to cash out today. But as soon as that happened, everybody stampeded out and caused a $2 move that was a little bit unexpected. And probably about maybe $18 million made on the call side from yesterday. That was probably a little unexpected. It had to move at least $1 either way. But that was what I was looking at when we were talking about it yesterday. eBay is planning a spinoff next year. At least that's the rumor that people at eBay are putting out, that they don't want to attribute it to themselves. I'm kind of reading between the lines out here. But the eBay guy's kind of under fire, the CEO, and looked to me like that was a well-planted leak. But they're now starting to talk about it to people that might go to work at eBay. And to me, probably more of an interesting item out here, where you actually see people, a little manipulation out here with a slight volume, trying to get your stock up a little bit into September. Never a bad thing on Wall Street, and certainly looking at it that way. Let's see. Update that one. Update. I've just got a couple of things to do. Update that one. And we'll look at it. Okay, so in the heroes and zeros today, a lot of these are earnings related. Bon Store up almost 13%. Children's Place, also a retail children's store, up 6%. HP, of course, we were talking about that, up 5.7%. Hormel Foods, I should have my spam song ready, and I don't. Spam, 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 spam. Wonderful spam, wonderful spam. Anyway, I'll have to sing these. Hormel Foods, up 4.6%. Perry Ellis, one of my favorite companies, in that I bought them at the 2009 lows. A great chart to go back and look at if you want to see how price and volume works. But I brought up the story before. Those March 2009 lows, I made a ton of cash fairly quickly. I had written a program to go out and look for the lightest volume tests of any lows out there. I started in 2004 or was it 2003 with Sears? I think it had to be 2003, when Sears tested a low that had 10 million shares with, I forget what it was, 120 million shares, something. 10 million shares with, I think it was less than a million. And I thought, wow, when price works well, when the volume's maybe 10% or more, less, or stronger. But boy, when it's a tenth, it works absolutely wonderfully. I think Perry tested its low in that March 4th area on 15%. I'm going to have to go back and look at it. Anyway, we'll be back in just a minute. Buckle up 3.4%.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. We've just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year. And if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, I'm going down memory lane down here, but I tell you what, when you get to lows, and why I like Perry Ellis is this huge move off the lows. When we look back at the the March 2009 lows. But November 14th, 2008, hit $2.40 on basically 800,000 shares, came back and tested it with 160,000 shares on March 30th. And that's everything that we were looking for to come back in there. But that's, I think that's when I bought this thing, is the next day when it closed above. I think it closed above that day. As long as it closed above 240, I was buying it. But this is exactly what you're looking for. A lot of people ask me on the Power Law Vector Indicator what you want to see. And this is exactly what we want to see. This thing came down with monstrous volume into that November 14th, 2008 low. And you see a number that's 3 there. And, of course, you get a bounce. It got some energy. Actually bounce with some very decent energy. Which is the automatic rally without preparation. It comes back down, and then the next leg down from December 9th, 2008 to this February 2nd, 2009 low, energy comes out by about a third. Then the next little bounce, the next energy comes down. And so it was about nothing. But I was buying every one of the companies that had tested previous lows with the lightest volume, and I remember them all. They were my own little children. I got out of this one way too early, But what a run. I sold it out at 14 some odd bucks from that $2 low. And just beautiful to see these runs out here. But that's why I want this market pull back, so I can get an opportunity to buy some more of these stocks like Perry Ellis back there on those lows. But I remember all my children from that March 2009 low. Perry Ellis, CSIQ, and there were some others involved. But maybe I'll show CSIQ again tomorrow. But for everybody that tells me price and volume doesn't work, I go back and show them this, especially when it's at extremes. And that certainly was a low of extremes. As they say, a generational low out there. But I digress. So what do we have to do back here to get this thing on? There we go. Anyway, we're talking about the winners, the heroes, now the zeros. Kamiko off almost 5%. Lancaster Colony off 5.5%. Stage Stores off 5.5%. Steinmart, one of my favorite stores. SMRT. They don't do a great deal of business or a great deal of volume, but boy, do I like those stores. I bought the shirt that I got on right now from Steinmart. What deals? I'm becoming very cheap in my old age. Cybertronic out here off 6%. Kirkland's off 7.25%. Sears Holding, one of the Walking Dead stocks out here. It's dead. They just don't quite know it. Off 6%, and more calls for somebody's head to be on a platter. And kind of strikingly, off the big loser today is WUBA, W-U-B-A, which is the internet company in China. And very strange to see that. I'm sure that they don't like that much going into the Alibaba IPO out here. Andy Heck is IMing me and said that Steinmart is because of our age. No, I think it's because I live in Florida. It's hotter than hell, and they've got the best golf shirts that you can sweat in. And probably Las Vegas, pretty hot, probably the same thing. Just the wonderful golf shirts from last year that are a fourth. But I go about once every 3 months when they have the big sales. They send me the coupons. It's 50% off. The 50% off they already took off. I've got shirts that were $70 that you walk out the door with for $10. No wonder they're not making any money. It is a mad market. So we're going to look at some of these stocks that are moving out here. The Bon-Ton stores, of course, we talked about that as one of the big poppers. And we talked early this week about retail and these things kind of acting like they were making some kind of lows. What you really wanted to see was, of course, it get into that $9.12 low with a lighter volume. It really didn't, but it didn't seem to matter with the Bon-Ton stores. What do these guys do? You have to get their profile. The Bon-Ton stores, department stores offers brand name fashion apparel, accessories for women, men, and children. Don't know them. They're not around here. And they're no threat to Steinmart as long as I've got a wallet. Anyway, when we come back, we're going to look at the rest of these stocks that are...
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we come back, S&P up 6.7 points, which is 0.34%. So up just a little. Volume just turned at 1.7 billion shares. So it is a rather quiet afternoon in the trading floors. Had a email from Dave in Oklahoma. Thanks, Dave in Oklahoma, for a name and a place that you're calling from, or actually emailing from. You can be like Dave and email me at path@tfnn.com if you want to take a look at a stock. We've got a little penny stock coming down here, and I did some studies a while ago that basically said that most of my analysis doesn't work when these stocks drop below about 300,000 shares. This one, of course, 100, 150. So I'm not going to claim to be any wonderful expert on it. This company designs, develops, and manufactures, distributes compound and single-element semiconductor substrates primarily used in the wireless communications area. So, silicon wafers. So anyway, what can you really make out of this? Probably not a lot. Just statistically, it's hard to get a good read if you don't have a lot of people buying and selling these. And it's tough. The question is what I think about this. And unfortunately, may be a wonderful company, Stocks without 300,000 shares, in fact, I like 500,000 shares today, to get at least some idea of a tradable market. If you get bad news on any stock, of course, they're not going to let you out easy. But a lot of times in these small stocks, you can't get out at all. So I'm just a fan of wanting to, as they say in flying, there are old pilots and bold pilots, but not many old, bold pilots. And to me, just the volume would make this too much of a risk. But probably coming, if I didn't look at the volume, I'd say this is probably coming back to $2.25 into that gap from the 8.1 with 200,000 shares, which is probably going to act as support. But this thing kind of more like a heartbeat than anything else. But with light volume like that, it is tough to trade one of those. Anyway, we were talking about Bon stores, or Bon. I wonder who named this thing. Anyway, I don't even know this store, and I'm I'm starting to dislike it because of that name. Anyway, we talked about that. Cato, my little yellow friend. Of course, if you love the Pink Panther, you love Cato. C-A-T-O. Probably no different out here. Let's get a quick headline on what this operates a specialty retailer of fashion apparel and accessories in the southeastern United States. Well, not around here. Maybe it's in the malls that I don't go into. Operates in two segments, retail and credit. Credit. Company stores offer a range of apparel and accessories for women, including dresses. Kids. The Cato Fashions, Cato Plus. July 10th. 1,300 stores, and I've never seen one of them. Must be a chick place. A chick flick. They see a chick flick, and then they go to the Cato. Anyway, this thing's up here. Again, fairly light volume, but they did have earnings. But it's interesting. Cybertronics, it's down a little bit here today. Now, this one did have a great deal of volume. Looks like it's going to head down to the $55.27 low that we saw on June 24th, which is the high volume low. And as we say around TFNN, you got to watch those high volume lows. They are probably highly going to get tested. It's like 85% of those things get tested in 6 months now. And it used to be like 80. Now it's up to about 85%. Hormel Foods, Sir Spam-A-Lot, the wonderful Spam, did hit this high, but this is like a lot of these again. When we get up to the highs, this happened 9 months ago. We were bucking these highs and nothing really happened. Volume would increase. You would still close below the previous lows. And Hormel kind of giving us a little bit of that flavor. Had all the volume it needed to have a breakout today. Had a nice big candle out here, but looks like it's going to close under that June 20th high that had 1.1 million shares. You wanted it to close over that with decent volume. You've got the volume. But if you close over it, it's only going to be a few pennies. But not uncommon. For this time in the summer. Kirkland, a lot of these stocks I don't have a lot of time to looking at. Operates a specialty retailer of home decor and gifts in the United States. These all must be in the malls that I don't go to. The company stores various merchandise, including framed art, mirrors, wall decors, candles, and related items. All the chick stuff, apparently. Kirkland's, anyway, K-I-R-K, if you haven't heard of it. Another low-volume stock out here with high volume today. Look like it will go after the lows. Lancaster Colony Corporation. Too light a volume for me to look at. Navros Marine Holdings. This one's got some decent volume out here, so let's take a quick look at that one. Operates a seaborne shipping and logistics company. It focuses on the transportation of dry bulk commodities. So another wonderful dry bulker. We talked about those, on Monday and Tuesday. Navros Marine Holdings, NM. Not much of a move up here with volume, but you would have liked to have seen that $7.40 low come in, maybe even a little less, but 20% lighter volume than the April 30th low. So you could put it in a bottom. What I dislike about this thing is it came down with energy from the June 18th high to the August 5th low. And energy is doing okay. It may match it on the way back up to this 1058, which was the June 18th high out here. We'll zoom in here just so people look. Perry, we were talking about this one on earnings, nice little pop. I'd been watching this thing, hoping it was going to come back to this big gap that happened on the, May 22nd, that had almost 700,000 shares. Kind of had kind of an intraday thing where it had that big reversal I did not catch. In fact, I didn't see this until the end of the day, but I'd been watching this one. Now this one's kind of getting into some light volume. Again, another one with higher volume. Went to a higher high today than the August 11th high, but is pulled back into the trading range. So not uncommon. Children's Place, one of these stocks that does have fairly decent volume. This thing gapped down on earnings back on March 6th with 3.8 million shares. So you would have liked to seen a lot more volume. It tried to get back into that gap on March 25th with 700,000 shares. It is into that gap today with 1.2 million shares so far. So volume has picked up since that high, but probably going to see and continue to see a great deal of resistance as it gets up to those levels, and all the people that have been trapped like rats from this, February 26th high, where it pretty much has had people on the wrong end of this stick. And you know what's on the wrong end of the stick. Ugh. Horrible. You don't know where that stick's been. Sears Holdings, of course, the Living Dead, the Walking Dead, I guess would be that. Boy, did I hear them throw a great deal of ideas around on how Sears would be better today. Some of the ideas are they're going to spin off all the automotive departments that sit out in the corner of the malls that I don't go to, which I thought would be interesting. But you got huge volume on the downside, so this thing is going to be running to that April 14th low at 31.26. Wasn't a great deal of volume out there, so going to be tough to see how this thing runs into any kind of long-term support, but $28 from the January 5th 2012 low, and the high let's call it $29 and a dime less. February 5th looks to me like this thing's headed back to that low. 3.2 million shares, especially when we look at it in the context of today. 3.4 million shares already. I think it's probably going to blow through that. It really looks like it wants to test that high volume low that it has been untested from January 5th. And, just look at this big pattern as it sells off. Of course, my Living Dead stocks, they just don't quite know that they're dead yet. Steinmart, this thing's just a big mover out here making a big triangle. Not a lot to read in it other than I want those red dot coupon sales this weekend. They probably have another one. Another one that looks like it's breaking out its lows is Stage Stores SSI's the symbol. This had a low at $17.63 from May 21st with 640,000 shares. We're already into it with 1.3 million shares, so we've doubled it and going to do more. So when we take this back and see a little bit farther here, this is pretty much blown through all those lows. And you've got some highs back here in about the $15 range from 2011, August 31st of 2011 and October 27th of 2011, in that just over the halfway mark of $15. No huge volume out there, about 450 million on each high, 450,000 on each high. So we'll be looking at that, but you might find some support back in there. And we were talking about WUBA, 58.com. This was down on heavy volume. Of course, this is the Chinese internet company. And just so I don't get this wrong, I'll take a look at it. Disappointing outlook. Yeah, this. I remember when this saw the tape running through on this. They did guide down, even though their earnings were fairly decent. It's an online marketplace for local merchants and consumers in the People's Republic of China. The belief, I think, now is that with Alibaba going public, that 58.com is going to have a very tough road ahead of it. And part of the reasons why that I think they are guiding down themselves. Anyway, you can always give me a call at 877-927-6648. That's 877-927-6648. Too soon to be shopping at TJ Maxx? The bargain hunter. I've got one up here, but the stores are kind of, the clothes in it are pretty creepy. I got to say that the clothes are good in Steinmart. I mean, they're top level clothes that you would see on the on a major golf course. They just may be 1 year old, so maybe a little out of style or something. But 20% of the cost, it doesn't bother me, especially as fast as I sweat through them. Other comments: can't shop at Steinmart. The pants aren't high enough. Okay. Well, anyway, we've got some interesting comments in a quiet period of the market. We're going to take a look at some of the movers as we have time. We've got a few minutes left in this one. Very interesting movements in Avago technology, of course. This one is big into the semiconductor space with and along with, they sell to Apple and some of these other ones, ASICs optical lasers, transceivers, but I think the big claim to fame is they've been supplying Apple. Come up, and it's testing that July 22nd high with lighter volume. You needed 2.3 million shares. You had 1.1 million before, or on yesterday. The day before, 1.8 million shares. Today, 1 million shares. And a little doji out here. I would not say that we're not going to probably have some back and fill. I'm not looking for this market to really take off in the next week, but probably hold these highs. And from day to day, you're probably going to see some of these stocks run up and run the shorts. They don't make it easy for you to get out. Gold trading $12.77 off $18. Crude, I don't see a change in that. But I think it was trading up a couple of bucks. See if there's anything else going on out here. Oh, I see no one's changed the contract, which we probably should have done. But December contract on gold off $18 and off 6 cents on silver today. So we will take a look at that. What else do we have going on out here? Anyway, Boston Properties. Another one of these stocks up here at these highs. I wanted to see whether this thing had any juice. Doesn't look like it today. 268,000 shares so far. Needed 820,000 shares from this June 9th high at $122.40. Got into it on at least into those candles on July 28th with 650,000 shares. So you came close. We're up here, though, and just not a lot of volume, of course, in any of these stocks up here. But so I'm not worried about these things really breaking out, but they may give you some opportunities to pull the trigger on some of these shorts. What else do we have out here? JBL. Jabil Circuits, another one out here. Now, this one, much more dramatic test of the high so far. No volume out here. JBL looks for 3 million shares from July 22nd and 600,000 today. We'll be back in a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back, I had a email from David I think it was David in Tennessee. It's Tim in Tennessee, and asking if, talking about all my children from the lows of March 2009, if this isn't just the opposite side of it, all these tests with light volume. And I would say yes, except we're in the last 2 weeks of September, where volume gets light, and like I said, I'm not expecting a breakout, but I'm also not expecting a breakdown either. This is fairly identical to the last 2 weeks in December. Volume goes light. There isn't a lot of reason to sell. You can always pay your taxes next year if you've held it this long. Hold another couple weeks, and you get a whole year before you have to pay your taxes. So there is a great deal of sit on the fence and wait, see what happens January 1st. But in this, it was just everybody on vacation, a kind of unwritten rule that we're all going to the Hamptons here at Wall Street. I don't want the market moving down. We're going to drop volume, and without volume, it's very hard to get a market to go down. you've got the natural shorts out there that are going to sit here and probably bleed out over the next 7 or 10 days. There is money to be made, though. Unfortunately, it is kind of tough to do it, mostly in commodities. I have 2 commodity positions in my daily newsletter. In my weekly newsletter, I've got a couple of positions where I do think I'm buying at the lows. I kind of like both sides of it. The longer side of the Tech Insider and the short-term move, which one of my stocks is up. What is it up? It's up 6.5% today. I think it was up a few percent yesterday. So starting to get a fairly decent move out of that one, and getting ready for the gravy train. I've got a one that got at $10. That just a standard retracement would take me to 15. So I really like that. Anyway, I think it's different. If we're going to have a light volume move on a crash, it's probably going to happen more into September. But I'm going to wait until that everybody comes back. We start seeing some trading moves, and we get a little farther into September. But I really don't see anything here other than everybody waiting for the Fed to actually say they're going to raise rates, in which case the market will probably crash. So until they get ready to do that, which I don't believe is going to happen until after the election, we may just have a market that drags out all the way through November, maybe even to the first of the year. So I'm going to have to see some real evidence after this last move down with a false breakout that this market just isn't going to hang up here. They're going to distribute everything at the highs, and that will be it. George Soros has made a big bearish bet. That big bearish bet, though, has been on for a great deal of time. I know they reported it as new news, but that news is at least 6 months old. He's been shorting the market for a year in the S&P, and I don't know what else to say. I think he's got a good bet because one day it will pay off, but it's kind of hard to see that it pays off tomorrow. And, of course, we're not, even my long-term trades don't come anything close to having $3 or $4 or $5 billion like he does, and be able to drop 10 million S&P puts on the market. Or was he short? I think he was short puts, or not short puts, but he was short using puts. Let me put it that way. Well, we're out of time today. Tom, of course, coming up right after the show. A few earnings after the bell. Look forward to hearing what he has to say about the gold and gold moves out here. We will also be back tomorrow. Same bat channel, same bat time. So when you can, not when you have to. See you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.